fundamental sense about the kind of action that we've been seeing in the markets and the sectoral move lately. Dharmesh, hi, good afternoon, and good to be talking with you today. First up, give us your overall sense on where do you see the market headed, given that the biggest trigger, the earnings season, all set to kickstart tomorrow. Your outlook on the Q2 earnings season, and the street largely expects this to be better, slightly better than Q1. Do you echo that view as well?
Yeah, good afternoon. Definitely, it looks like seeing the advances growth number of all the financials and banks which they have reported, both public sector and private sector, does reflect that there has been some uptick in the economy. Otherwise, public sector banks would not have reported 15 or 13% kind of an advances growth. So that was an outlier to that extent. Even HDFC Bank came out with a good set of growth number of 9.9%, which again is a proxy of economic momentum picking up. So we do think that this slightly it would be better, though in single digit only, but earlier the expectation was around 4 to 5% kind of PAT growth on the EPS of Nifty 50. But this time I think it may be 7.5 to 8%. So which is better than what the expectation was. And this is, I'm talking about the pro forma earnings growth and not on the extraordinaries and one-offs are to be excluded from that. And there we do think that, automobiles can give you a slight outlier kind of a performance, followed by metals basket. That's looking pretty attractive. The demand has been good on the Indian domestic metal consumption. So these are two sectors, banking, automobiles, and metals. These three put together should do well. And the others would be lackluster only. I mean, nothing great is expected. And the disappointment will come from the consumption sector. So all FMCG plays like Dower, HUL, and the likes are likely to disappoint again. So net slightly better than what the expectation was, and the market is echoing the same. It's range bound though, but likely to pick up post earnings seasons, start slowing again.
Right, Dharmesh, just two questions for you on that view. First up, you said consumption could be the laggard this time around, and fair on the back of these GST cuts and the disruption we've seen over there. First question to you, do you see this changing by Q3? Are we expecting to see some recovery in consumption? And while you did say that Dabur and other staples could be under pressure, what about discretionary? What about retail? Because the update from Titan is stellar today.
Yeah, see, consumptions have different baskets. So what I was talking about the staple basket
Staples,
as
yes.
of now, and that will disappoint. And we don't think that Q3 would be better than Q2, or remarkably better. It can still be slightly better off. Volume growth can climb from 3% to 5% or 6% kind of a thing, but nothing which can move the needle so much that a re-rating comes into the play. As far as jewelers are concerned, they posted good set of numbers, be it PC Jewelers, PN Gadgil or Titan. But Titan, you have to read with a pinch of salt. There's a caveat out there. If you look at the Titan numbers, the studded jewelry segment grew by around mid-teens, so that is what they have reported. And the plain gold jewelry was lower than studded. That means it's lower than mid-teens. And the coins was the one which did the rally. All the growth numbers came through selling of coins. So where the margins may not be there. So I am very pretty much sure that when they report their Q2 earnings, there would be a squeeze in the margin front. And this time Navratri has fallen into the last one, September. So Q3 numbers again, because you have only one festive season going by, that is Diwali. So to my mind, whatever rallies happened in Titan, maybe a couple of percentage point more, but then the stock is not likely to see a trending bias going forward into Q4. So Titan one has to read carefully the numbers, and even the watches was only 12% and ivory was 9% kind of a growth. So nothing major happening out there. They did cite that customer count have fallen marginally, so that again is not a good sign for them. But I think local jewelers like PN Guided and all are likely to do better going forward, because they have a franchisee model as well, which has been working well for them. And Kalyan Jewelers also has been doing well. So this is on the jewelry segment, but consumer durables, as far as they are concerned, I think automobiles will top out this time around. The numbers, because the base effect of October was very high last time. Both Navratri and Diwali fell into the same season. They will do 10%, 12% kind of a growth numbers in October. But again, it is likely to plateau out from there on, because forward bookings are not there. Whatever has happened has happened. It's now the delivery which has to take place. So our advice is there's a time for medium to short term perspective. One should be booking out and then wait for November and December to pan out to take a structural, tailwind kind of a play. But for that, there's a wait time for that. A better entry can be there.
So that's the take coming in on the overall consumption basket. Maybe more trouble ahead for auto names post the quarter 2 earnings. But let's focus from autos and consumption to telecom now. In a conversation with ET Now, Gopal Vittal, the MD at Bharti Airtel, addresses the issue of spam calls along with sharing insights on the new partnership with Starlink and the synergies from there. Let's take a look.
We are doing our bit, and we've launched the spam solution. We've almost reduced spams by 48 billion in India. Fraudulent links of over 3.5 lakhs have been blocked. The Ministry of Home has recognized our efforts. But the fact is that no one player can do this alone. So you've got to have the whole ecosystem. I've got to run the whole ecosystem to be able to partner. And that will require, potentially new institutions. It'll require new regulation because the surface area of this crime is not just on the telco networks, on SMS or calls. It's also on digital side, and so it needs to be and I think that part needs to move as well.
Sir, a quick word on Satcom, given the fact that there is a lot of interest in this particular space, and of course not just in India,
we encourage it. We're partnering with satellite players. We partnered with Starlink, we're partnering with OneWeb. So we think it can solve a unaddressed, set of users who are potentially don't have connectivity to be able to get connected. So that to me is exciting.
That's wonderful work coming in from Sumita Karir. Word coming in from Airtel. Dharmesh, are you positive with regard to some of these telco names? And there are very limited players, frankly. Any one in particular that you like? And let me also throw in an Indus Towers. Any of those that you're liking at this point? Is Airtel at an interesting inflection point from a valuation perspective or not really?
See, as far as Bharti Airtel is concerned, I think it's priced to perfection and nothing wrong with the company. It will continue to do so well going forward. And 12 to 15% kind of a compounding on stock prices will be there. It will command a higher valuation premium compared to its peers. So that's for Bharti. I think the best way to play this out is again Reliance Industries because of the Jio platform they are having. The subscriber addition was quite great this time around, and they are also garnering data share base quite rapidly. And there's a headroom for the ARPUs to go up from 208 rupees to 250 rupees where Bharti is there. Bharti has guided eventually for 300 rupees kind of an ARPU. So I think Reliance will also catch up with that, and they have been a modest player out there. As far as Indus Tower is concerned, fantastic company, fantastic business, numbers are great, valuation are extremely great, but the only problem is Vodafone Idea, and because of that overhang, you don't know how much of your money can go into write-off and things like that. And life is becoming difficult for Vodafone Idea because of the debt on the balance sheet. Interest servicing is cash flow problem is still there. So that unless that overhang goes out, or there is a visibility of that, panning out, that hope trade playing out, then I think Indus Tower will go for a substantial re-rating. So just if somebody wants to take that plunge and have that card playing out, then Indus Tower is a gateway. But to be safer, I think Reliance offers a better opportunity given the valuation multiple. It's already, if you take the Jio platform kind of a valuation, it's already 20% discount to what Bharti is commanding. So that catch up can likely happen in near future. So the delta will be higher out there.
Okay, that's the word coming in on telecom. And in fact, Dharmesh, that's the kind of numbers we've seen when you take a look at the August subscribers numbers for some of these telecom companies. Bharti and Jio continue to add. But on the flip side, there's been a loss of about 3 lakh subscribers for Vodafone. So that trend is going to be something to watch out for very closely. But on that note, we'll step into a short break and keep the conversation going on the other side. Let's come to you and let's shift focus to the market right now. Lots of newsmakers in today's trading session. You have some individual stock action happening. Sectorally, not much happening. It's IT and metal with realty, auto, energy under pressure today. But Dharmesh, PSU banks, they also continue to be under pressure for multiple days in a row now. What's happening with PSU banks? Because yesterday, at least, we were seeing some strength coming in from the private sector banking names. But today, they too are under pressure. But PSU, further pressure on names like Union, PSB, Canara. Your sense on PSU banks?
I think it's more to do with technical profit taking happening out there. and more of our market cyclicality and the trading pays on a day-to-day basis, which is there. Nothing structurally wrong with the PSU banks, because if you look at the numbers of be it Indian Bank, UCO Bank, Punjab and Sind Bank, Bank of India, Bank of Maharashtra, they all came out with stellar set of numbers. And the good part about most of the PSU banks is last quarter, if you remember the numbers when private sector banks reported a decline in the asset quality and higher credit costs. These banks reported steady asset quality with not a significant increase or a marginal increase in credit costs. So I think this quarter with 13-14% kind of a growth numbers, if any meaningful correction sets in, it's an ideal opportunity to get into your cherry picking in the PSU basket. We like Bank of India the best among the lot, and the reason being it's the cheapest among the PSU banking lot. It's available at 0.69 price to book value 1 year forward. Whereas for the last 5 quarters, every quarter they have reported 13-14% kind of advances growth with stable asset quality. NIMs are likely to bottom out in Q2 with 5-6 basis point kind of a contraction, and thereafter things are likely to pick up. Whereas Indian Bank and the others in the like are trading at, for example, Bank of Maharashtra as well, 1.4, 1 or 1.3 times price to book value. So a lot of catch up and re-rating can happen out there. So meaningful correction buy, but 1-2% decline is not a great decline to get into a investment buy.
Okay, Dharmesh, what's the take with regard to an SBI Cards? And before I take a technical view, we also have Kapil Shah joining in, analyst at MK Global Financial Services. Welcome, Kapil. Good afternoon. But before I come to you, Kapil, let me ask a fundamental view with regard to an SBI Cards, because that stock has spiked up. The RWA, which is risk-weighted assets, has come off where credit cards is concerned as per the latest draft by the RBI, and that has kept SBI Cards in focus. Give us a sense, Dharmesh, as to what you see.
See, again, it's a trading pop which is happening on SBI Cards. If you remember last quarter numbers, they came out with 9.6% kind of asset quality deterioration. So that's the NPA out there. So any business where you can see 8 to 9% kind of a problem area is not a good choice to be into. We are into a festive season and we have seen the kind of retail sales spurge which has happened, and this is likely to continue in the month of October as well. So the numbers which they are likely to report, it's a trading play which has happened in anticipation of that. But to my mind, though the risk weightage has come down, but as long as asset quality itself doesn't improve, the chances are there because of increased lower GST cut, indirect tax cut, and everything should increase the paying capacity, and default should not be there. But to my mind, I mean, this is a vulnerable portion. So unless the proof of the pudding is there, one should not be going into a investment bet. Yeah, technical trades and short-term plays going into this festive season can always be there.
Okay, so that's the take coming in on SBI Cards fundamentally. Kapil, hi and welcome to the show. Good afternoon to you first of all. What is your reading on the charts for SBI Cards? And if you can just pull up the slightly longer term chart of SBI Cards and see what the trend has been like. Something like 6 months, okay, the stock is up about 8.5%. In the last 6 months, it's all a little bit of dip and then a recovery post that. Kapil, any levels you're spotting out for on SBI Cards?
Sure. First of all, good afternoon to everyone. So first of all, SBI Card from the shorter to the medium term perspective, we are seeing that the stock is started to find the traction, and previous 2 months it has been moving on the higher side. And on the daily chart, we are seeing that whatever the previous hurdles levels that we were seeing, like an 890 level, 900 level, so it is surpassing. And right now it is trading at a mild resistance of a 930. So for the further betterment or better confirmations, we rather wait for a 930 to move over, which is just an inch away from the current level. So above the 930 level, we are expecting some sort of positive momentum, and upside potential can be up to the 1100 level, and we will be remaining in the positive stand as far as stocks is above the 880 level. So that is from the shorter to medium term perspective. And if I capture the broader view, the stock is slowly, steadily changing in the structure on the positive side. But however, for the positive momentum to build upon, stock has an immediate hurdle of a 1010 level. And once that particular level is crossing or around 1000 point, it is moving on the higher side. So that will be a kind of very long consolidation patch breakout. And then we see that this stock is entering the stage 2, which is what on a rising phase, but that is above a 1000 level.